Welcome, entrepreneurs. Today, we're going to explore a crucial topic that can help you save big on your taxes: the difference between tax credits and tax deductions. While both can reduce your tax liability, they work in very different ways, and understanding the distinction is key to maximizing your tax savings. By the end of this session, you'll have a clear grasp of how tax credits and deductions function, with real-life examples showing how each can impact your business. You'll also learn how to strategically use both to enhance your financial position. Let's dive in! Let's start by explaining tax deductions. A tax deduction reduces your taxable income, which in turn lowers the amount of income subject to taxes. Deductions are subtracted from your gross income before your tax liability is calculated, meaning you only pay taxes on the income that remains after the deductions. Here's how it works. If your business earns $100,000 and you have $20,000 in deductions, your taxable income becomes $80,000. The amount of tax you owe is then based on that reduced income. However, the value of a deduction depends on your tax bracket. For example, if you're in the 24% tax bracket, every $1,000 deduction reduces your taxes by $240. Let's take a look at a real-life example to see a tax deduction in action. Meet Sarah, who runs a digital marketing agency. Last year, Sarah spent $10,000 on business expenses, including office rent, utilities, and software. Her total income for the year was $80,000. Without any deductions, Sarah would owe taxes on the full $80,000. But because she can deduct her business expenses, her taxable income is reduced by $10,000, leaving her with a taxable income of $70,000. If Sarah is in the 24% tax bracket, this $10,000 deduction saves her $2,400 in taxes, 24% of $10,000. While deductions don't lower your taxes dollar for dollar, they can still lead to significant savings by lowering the amount of income you're taxed on. Here are some common tax deductions that entrepreneurs can take advantage of. Business expenses. Items such as office supplies, utilities, rent, and marketing costs are deductible as long as they are ordinary and necessary for your business. Home office deduction. If you use a portion of your home exclusively for business, you may be able to deduct a portion of your home expenses, such as rent or mortgage interest, utilities, and maintenance. Vehicle expenses. If you use your car for business purposes, you can deduct either actual expenses, gas, repairs, etc., or use the standard mileage rate. Depreciation. For larger assets like machinery or computers, you can deduct the cost gradually over time using depreciation. Now let's move on to tax credits. Unlike deductions, which lower your taxable income, tax credits provide a dollar-for-dollar reduction in the amount of tax you owe. This means that if you qualify for a $1,000 tax credit, your tax bill is reduced by exactly $1,000, no matter what tax bracket you're in. There are two main types of tax credits. Non-refundable credits. These can reduce your tax liability to zero, but they cannot result in a refund if the credit exceeds your tax owed. Refundable credits. These can reduce your tax liability to below zero, meaning if your credit exceeds your tax owed, you'll receive a refund for the difference. Because tax credits reduce your tax bill directly, they tend to offer more value than deductions. Now, let's see how a tax credit works with a real-life example. Meet Tom, who runs a small software development company. Tom invested in research and development, R&D, to create a new software platform, spending $25,000 on qualified R&D expenses. He qualifies for the Research and Development Tax Credit, which offers a 20% credit on his qualifying expenses. Tom's tax liability for the year is $10,000, and his R&D tax credit amounts to $5,000, 20% of $25,000. This means that instead of paying $10,000 in taxes, Tom only owes $5,000 after the credit is applied. Unlike a deduction, which only lowers taxable income, Tom's credit reduces his tax bill dollar for dollar, giving him a more significant reduction in taxes owed. Let's compare a tax deduction with a tax credit to illustrate the difference in tax savings. Imagine you're a business owner with $80,000 in income, and you're eligible for a $1,000 deduction and a $1,000 tax credit. Here's how the two compare. With the $1,000 deduction, if you're in the 24% tax bracket, the deduction reduces your taxable income to $79,000, saving you $240 in taxes. With the $1,000 tax credit, your tax bill is reduced by the full $1,000, regardless of your income level or tax bracket. As you can see, tax credits are generally more valuable than deductions because they directly reduce the amount of tax you owe, rather than just reducing your taxable income. So, how do you maximize both tax credits and deductions to your advantage? Evaluate eligibility. Review the various deductions and credits available to see which ones you qualify for. Keep in mind that certain business activities like R&D or investing in energy-efficient equipment can make you eligible for tax credits. Track all business expenses. Keep detailed records of your expenses throughout the year. Whether it's office supplies, vehicle costs, or marketing expenses, having accurate records will help you maximize your deductions. Consult a tax professional. The tax code can be complicated, and a tax professional can help you navigate which deductions and credits apply to your business, ensuring you optimize your tax savings. In conclusion, understanding the difference between tax deductions and tax credits is crucial for making informed decisions about your tax strategy. Both can save you money, but they work in different ways. Tax deductions reduce your taxable income, offering savings based on your tax bracket. Tax credits offer a dollar-for-dollar reduction in your tax bill, making them more valuable in most cases. By combining the right deductions and credits, you can significantly lower your tax liability and keep more money in your business. Thank you for joining me today, and I hope this session has given you valuable insights into how to maximize your tax savings. Be sure to work with a tax professional to ensure you're getting the most out of your deductions and credits.